Yeah, as they foreshadowed, volumes are increasing across the board, particularly in iron ore. Iron ore is the bulk of Rio's earnings, and so they're producing just under 3 million tonnes, which is about I think it's something like a 17% increase on the previous year. They expect to get to 330 million tonnes next in the 2015 year, and are on target to the eventual target of 360 million tonnes per annum. So massive ramp up in volumes to try and offset the price declines we've seen in iron ore.
Right, so this is part of the strategy that Sam Walsh has talked up quite a bit, and the costs we'll get to in a second, but in terms of production, combating falling iron ore prices, some people have criticised this tactic, but it seems to, he can point to this as evidence that it's working so far.
If you can produce the next tonne of iron ore at $20 US a tonne, and the price, whatever it might be, $68, $70 a tonne, you're still making fabulous margins, fabulous amounts of money, and Rio can do it. It's the low-cost producer in the sector, and has very high-quality iron ore as well, so they get the price benefit of that. If you're a smaller, higher-cost producer, it makes no sense to increase production. But for BHP and Rio, and to a degree Vale, the sort of bigger is better strategy, even in a lower price environment, actually does work.
Right, and although there have been some, there's been some consternation with the industry, for Rio shareholders at least, this is working.
We'll see whether it works for Rio shareholders or not next month when they produce their financial results. But if you look at what Sam Walsh has done since he became CEO, I mean, he's lowered the cost base quite dramatically, something like $4 billion a year plus. He's taken a lot of capital out of the business, and that's continuing. Right? So even though prices for everything they produce, just about other than aluminium, have been falling and falling quite precipitously, Rio's free cash flows have actually been rising, which is why he's been able to promise in effect, that this financial result will see a material increase, and indeed over the next 5 years there'll be a material increase in the cash returns to shareholders. The market's expecting some form of capital management with the result in the first couple of weeks into next month. Probably not a huge buyback, but something, a couple of $1 billion maybe, but certainly some sort of a 5-year game plan to dramatically increase the cash returns to shareholders.
Right, so I mean, this strategy we've seen recently of pushing down costs and increasing production, is there a suggestion that we'll see that start to taper off?
Oh, it has to taper off because, in a sense, the low-hanging fruit was taken out back in 2013. So it gets progressively harder to drive big changes. But there's no doubt that as they've drilled down and as they have kind of re-engineered the way they do things, they're still producing benefits out of that. Now, they talk about productivity gains, so it's a combination of costs and volumes, and that's been the game plan, both at Rio and BHP over the last couple of years. And there's still some momentum in that, although, as I say, it gets progressively harder to get the big gains. But certainly, neither Rio or BHP are doing anything other than the most obvious types of investment. So they're only investing where they actually need to invest or where there are obviously high returns. And that by itself frees up a lot of cash. So we're now moving to this next phase where the shareholders who didn't get much during the boom because it was all being invested are going to see something out of the bust. In Rio's case, there's a particular external influence over the need to reward shareholders because they're being stalked by Glencore, Ivan Glassenberg. Remember, he approached them with a merger middle of last year, and will be able to return under the London takeover rules in April this year. It's become harder for Glencore because their share price has cracked and has fallen further than Rio's. So they're a significantly smaller beast than they were when they first approached Rio, and significantly smaller than Rio. So it becomes harder, but Glassenberg has been making that argument that this volume-driven strategy is wrong because it depresses the prices and leads to an oversupplied market, which it has. Sam Walsh has an opportunity to prove that case wrong with the financial results when they become due next month.
So it's not just about him pointing to those results, it's also about him getting some kind of satisfaction within the shareholders as well, right? Because that'll secure his position.
Oh, look, I think these results either prove the case or don't, that the volume-driven strategy is the right one for Rio. I think it will prove the case that it is the right one in the circumstances. If he can do that, it lessens the chances that Glencore can force a merger upon him, and it'll reduce the level of shareholder questioning of the strategy. But I think you could already see it in the half-year results, for instance, that the combination of the volume increases and cost decreases, with a little bit of help from exchange rates, which will still be helping, offset the price impacts. Now, it'll be harder to do that at the sort of price levels we're now seeing, but certainly they would blunt the price impacts. So to me, the strategy has already been proven successful. But I think if you see it in the full year results and you see it in increased rewards to shareholders, then the market at large will become more convinced that it has been.
Right on. Stephen Bartholomeusz, thanks very much.
Thanks, Eric.